market midweek briefing, as we usually do a live analysis every Wednesday. So I'm gonna just fix a bit this. Okay. So, okay, perfect. Let me set up everything so you can see me and hear me loud and clear in all our social media, along with the GoToWebinar as well attendees. I can see that 18 people are in the GoToWebinar. Guys, I know that you cannot see my screen yet. Just allow me a second just to enable everything throughout all the platforms and social media that the HFM is currently hosting. So we're multi-streaming. Perfect, that's settled. And we are good to go. Okay. I should enable the screen to, okay, to HF2. Okay, guys, we are good to go. Perfect. You can see me in the GoToWebinar, and you can see me through our YouTube, HFM YouTube channel, Facebook pages, LinkedIn, Twitter, and anything you need is your session. Hello, Isaac. So it's your session, as I keep saying. So you can ask me to analyze any asset you want. You can ask anything you want, either if you want to figure out the fundamentals or you want help with the technicals. I'm here to help. So this is your session. Live analysis is also always your session. It's always your time to ask anything you want. I need to find a way to expand this window so I could be able to see you. Okay. Hello, could you please analyze gold? Of course, Lagna. Before I do that, though, I would like to brief you up a bit with what's going on. Yes, as Anka is saying, please brief us. Oh, no. Salam alaikum. If I properly say it, Mahmoud is saying, please, and update news. Yes, this is what I want to do firstly before we see together the markets. Okay, so 76 people are here. So guys, it's a very, very important day, and actually there is a lot of interest, especially in the stock market, especially what we have seen yesterday. We have seen, and I should enable also my MT4, which looks a bit odd. I will fix it right now. Okay. Guys, I'm struggling. There's something wrong with the... Okay, Tim, for the guys that they are in the GoToWebinar, guys, because I'm remote, I'm quite sick. That's why I'm doing this for my personal laptop. So I would really appreciate from all the people that are right now in the GoToWebinar, if they can join us in YouTube channel, so I could log out from GoToWebinar and continue in YouTube channel. Can you do this, guys? Can you join us via YouTube? Guys in the GoToWebinar, can you? Okay, okay. Please join us via YouTube channel so I could close the session of GoToWebinar and I will continue to YouTube. Okay? Hopefully you have all heard me. I have sent the YouTube link. I will send it again. And hopefully everyone can see this. So I will just close this session and I will stick with YouTube because it's easier. Okay, now we have a wider screen. So let's preview up with everything now that we have sorted out, and the team and the guys from GoToWebinar are gonna join us in YouTube channel. So excellent. Let's move on. Yes, update the news as my friend Mahmoud is saying. Yes, Mahmoud, you're absolutely right. So what happened over here? By the way, I have USA 100, okay, Nasdaq otherwise known as Nasdaq, and why I put that on is because we have stock markets. We have seen stock markets plummeting, planked if you prefer, since yesterday, and this decline seems to continue, not significantly, but they are significantly under pressure. This is the daily chart, and you see that is held at yesterday's close, at yesterday's bottom. The reason for that is three are the main reasons. Okay, so Fed. Why I'm saying Fed is not the anticipation. So tonight we have FOMC minutes, okay? We have FOMC minutes, but it's not the event as such. Is what happened so far and what happened yesterday as well. So we had seen strong retail sales from US. We had seen jobs, payrolls also solid. We have seen last week Waller and Brainerd announcing that they prefer, they want the tightening to continue, and they actually said that they want 50 points in the next meeting, right? But on top of all this, last night we had the PMI data, manufacturing services, and the composite. Services and composite were above contraction. They entered back to expansionary territory. So that means, here it is. This is the Nasdaq in a 4-hour chart, okay? So what that means? That means, yeah, okay. What that means? That means that the economy is still at a high territory. So the inflation could persist and will persist if we think about the fact that we still have strong jobs, we have seen services higher, we have seen retails higher. You can tell me, but Andrea, this is not what we need. We want a healthy economy, yes, an expansionary economy, but under some normal circumstances. We cannot have inflation at its peak. Yes, it slowed down, indeed, but slightly, still at a very high level. And at the same time, while we have seen Fed fighting to bring inflation down, to see also the data increasing. So it's not like that doesn't comes in line with the fact that Fed is trying to cool off inflation and bring eventually economy into normal levels. Okay, so what I'm trying to say is, guys, the data yesterday, they actually have increased the odds, and they have pushed the markets and all of us market participants, the Fed watchers, to price in more further rate hikes, not until Easter, actually into summer. So now all the strong data, they have obviously added further to this hawkish Fed scenario that we expect. But it's not only that. We have seen Fed futures actually pricing in that the Fed will breach 5.36% peak interest rate by July. So what that means, it means another 25 points in March, another 25 points in April, another 25, March, May, June, okay? And there is the risk of 50 points actually in the very next meeting. So these are the strong data, and the fact that the PMIs climbed, indicating further hawkish stance, having in mind that Mester and Bullard have already said about 50 points increase in 50-point increase in March, is just adding further to the sell-off of bonds and stocks. Remember, they are inversely correlated. High interest rates, it's bad for stocks. Why is bad for stocks? Because it affects negatively the companies. Higher interest rates means more expenses, more cost, less sales for the companies. Okay, that's why stocks were under pressure, and they expected to continue remain under pressure. So what we have: stocks, bonds under pressure, dollar remain at the 104 territory, so steady, holding some gains, steady at 104, ahead of the FOMC as well. But also something that also hurt stocks is the earnings season. We have seen Walmart and Home Depot yesterday night releasing earnings, and even though they have beat expectations, they had a slightly better revenue expectations, revenue than expected, etc. It's not that they couldn't boost the market, because they have announced, both of them, a lot of cautious outlook, significantly cautious outlook for 2023. They clearly, both of those retail giants said that we need to be careful about, we need to be cautious about this year's outlook, because consumers consumption in general expected to decline, and shoppers we have already seen shoppers buying only the necessary, buying only the basics, and this is expected to continue for the whole year. So that means less consumption. So data, strong data, adding further to the hawkish Fed scenario, so more interest rates. Now it is expected to be the case until June the earliest. A lot of risk alerts or cautiousness alerts from the corporate sector, and it wasn't only Walmart and Home Depot. In the past, throughout the month, remember Apple, remember Amazon, remember Google, remember all the giants and many companies, not only the giants, that they warn that, you know what, we will be careful, we will expecting less sales, we expecting less consumption and less subscription, and etc. So, and we have seen actually from their financial reports, even though their financial reports were less than fear, we have seen from their financial reports that their growth, it was a growth, they showed growth, but it was a slowdown. So now these are the key. This is what happened so far, and what is responsible for stocks and bonds drifting lower, lower. So I have more news, by the way, because we have seen RBNZ, we have seen Coinbase, Tesla overnight. But let's do that slowly as we analyze the market. Okay, so let me see your questions and take this step by step. Let's start. Hi, Andrea. I'm good, Emma. Thank you. So gold, yes, gold it is because you asked for it, and Alanga from our go-to webinar also asked for it. So let's start with gold. So remember, gold, let me just turn to gold. Okay, can you see that? Let me double check that you can see it. I will let you know which indicators I'm using. Don't worry. Gold, learning a lot. That makes me happy. I will do cryptos as well. Don't worry about it, guys. Okay, just let me just confirm. Please share the link again. You mean the YouTube link, Muhammad? Okay, let me do that. I don't know whether I could do that. Okay. I have a lot of questions. Background not clear. Hopefully it is right now because I have closed everything and now should be okay. Mom, gold going down 1725. Okay, let's discuss it. Let's discuss it. Good. Okay, perfect. Okay. A lot of gold. Perfect. Okay. Let's do this. Okay. Gold. Okay, guys. Gold. So let me just okay, so as you have seen, first of all, remember gold is dollar correlated, is a non-yielding asset as well, and correlated with, don't forget, uh, with interest rates and what the central banks are doing. So theoretically and traditionally, etc., the higher the interest rates get, okay, the sorry, the higher the interest rate gets, that the non-yielding asset, which is called, will lose ground because people are turning into the yields to the government bonds because they will have higher returns. Okay, but let's not forget that gold is also dollar correlated, is dollar cross. So gold is in a downwards trajectory for the whole month, if I'm not mistaken. Yes, for the whole February. Okay, and this is because of the weakness that we have seen lately in dollar and the bearish bets that we have seen in yields. And you can say, Andrea, but why? Because, guys, other than the fact that we are anticipating more hikes, the market is ahead of itself. It already priced in a lot, already priced in ahead of the time, a lot of those interest rate hikes. So there is a lot of pricing has started in regards to when the Fed will pause the tightening, will stop increasing interest rate, or even when it will start cutting. But nonetheless, okay, let's stick to what we see. We have this decline, okay, and I think I've posted also a gold outlook in our website. So just to see on what we have seen this month, this in 2023, this decline is due to the strong data, okay, and that is just is the strength of the dollar. But since it doesn't really comes in line a lot with the fundamentals, because what we have seen right now is that uh, gold is down. Actually, it comes in line with fundamentals because rate hike expectations are still the main driver for now. Hawkish Fed is still the driver now, so that implies to strong dollar and that implies to weak gold. So we are seeing this happening. So let's turn to technicals though, because this decline comes in line with the fundamentals for the time being. So now the technicals will help us figure out how low. And now I would like just this is a weekly chart, okay? I know you're not interested in weekly chart, but bear with me for a moment because we need to have to see together the key support levels. So key support level obviously is 1800, 1800s. Why? It's a key psychological level, it's a round number, okay? And coinciding with 20-week moving average. But for those that they for the asset breaching, if you prefer, the 1800s, we need to see a breakout of this bottom over here, the bottom that in which the asset is struggling to break for 1, 2, 3, 4, 5, 6 days. Can you see how beautiful is that? Indeed, the asset, the gold, breach a 38% Fibonacci, but is struggling to break it. Indeed, Fibonacci worked perfectly over here because we can see that it works as a retracement level, as a strong support territory. So the asset hasn't managed to break it for 6 consecutive days, but it remains on that area. So this is the key right now. The key is to see a daily candle, okay, a daily candle, bearish daily candle, closing below 38.2%. So below 1830 territory, 1830. But basically closes. So you need a confirmed breakout and a closure below 1830, like this one. So we need to see the candle closing, the daily candle closing below the 38.2. Why? Because this will give us a sign that indeed this sell-off will continue and could breach 1800 territory, 1790, or even as low as 1750. 1750, which is our, let me round it up, which is our 61 Fibonacci level, is a very strong retracement level, as you already know. That's why, my dear, who said 1725? Who said 1725? Who was it? It was it was Mohammed. So I cannot see 1725 for the time being. Dear Mohammed is far down. So even though the fundamentals could agree with you that we could have a significant sell-off, but we have a long way until that level, and we need to confirm this breakout, okay? This breakout, because momentum, even though it turned negative in this MACD over here, it stayed very, very close to zero. It's very close to neutral. RSI is at 39 and flat. Can you see? So it doesn't show that it will, whether this decline will continue. It's just neutral. So what the indicators are telling us for the time being is that the gold remains neutral. We need a closure, daily closure, your daily candle to close below 1030 in order to suggest a test of 1800 and even 1790, which is our 50% retracement level. Now, let's move on to our intraday basis for gold. Okay, guys. So we have seen it retesting again and again this 1830 area. So stack basically within the within 1820 and 1850 level, flat Bollingers, so a neutral outlook intraday as well. Let me zoom in to the 1 hour chart to analyze the intraday basis. So nothing really exciting for the time being. You know what I mean? Sideways, 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 sideways. A strong bullish candle the last hour, so that turns the attention. Oh, wait a minute. I have a bullish crossover here of my fast moving average. So let me turn to the 30 minutes chart over here. Okay, so drift down. It rebounded from my trend line. I have put this trend line in the 4 hour chart, guys. Okay, I connected the lows. So rebounded, a very strong 30 minutes candle just now. Is that something happened? Let me confirm that. Let me confirm that. Double check whether anything happened and I missed it. Euro data. No. Missed anything. Some geopolitics are going on around with Russia, China, and US, but cannot see something specifically for gold. So it might be the dollar turning lower ahead of the FOMC tonight. Let me double check. Yeah, a bit of a slowdown in dollar, nothing really significant, unless if I miss something. Let's forget this for now. Let's go back to the gold, and I will keep an eye on the news to see what is responsible for this bounce. So bounce away from the support area, and we have a bullish cross from my fast moving average. Guys, can you see the fast moving average? I am using 9 exponential moving average and 5 exponential moving average only for my intraday setup. And by intraday, I'm referring to 30 minutes chart and 1 hour chart, okay? Only 9 and 5 exponential moving average. And we have a nice bullish crossover here, suggesting that we could see further rise in the very, very short time frame. So eyes are turning back to yesterday's highs. So that takes us back to 1841 and 1843 area. A very, very strong bullish candle. Turn attention to yesterday's highs. Okay, that's nice. Okay, Okay, let's see. 1831. Very, very strong candle over here. We need to monitor. I cannot hear you well, Nicholas. Maybe your sound is not clear. Oh God. Let me double check. Is it still not clear? 1, 2, 3. Is it clear now, guys? Oh, can someone confirm that you can hear me loud and clear? Nicholas, Ivan, you are not clear. You're not clear. Still not clear. Okay, I'm gonna turn it to the. What about now? What about now? Guys? Nicholas, I did a change again, so can you tell me now whether you can hear me, guys? And I have an excellent camera over here. It's a shame not to hear me. Still bad on my side. Nicholas is saying it's much better. Saidul is saying okay. Maybe it's your connection, Lanka. I'm not sure. Okay, I will need another confirmation from someone else as well. No clear voice, no clear voice. It's much better now. Okay. Okay, we can hear you. So guys, it might be also your connection. People are saying to me that we are okay now. So fingers crossed. Better now. Yes, I can hear you. Okay. Oh God. So we are in gold. Okay. Are we okay so far with gold? We did weekly, daily, 1 hour, 30 minutes, so everyone should be happy about it. So, yes, let's move on. And we can return afterwards. You always use Bollinger Bands. Why? Because I like them, Renand. It's just my habit. What you see in my chart is things that I like. There's nothing right. There's nothing like wrong. I mean, I'm not doing it because it's a must or something. I just like them. I like having RSI, Bollingers, and moving averages, and MACD as well. So it's just my preference, nothing more than that. But I do understand if someone is a price action trader, so not using any indicator at all, or you like Chimoku. or Kader, for example, our French analysis is only using Ichimoku. So it's up to each one of you which setup you prefer. Euro dollar, of course. Let's move on to euro dollar. So that is also the even though the stocks and bonds are expected to continue under pressure, gold the same as well. But because we have tonight the minutes, we have seen some selling pressure and some buying pressure. So things are moving a bit sideways for some assets until the FOMC tonight. So euro dollar. So daily chart, you see that it's still holding that 106 floor. Okay, 106 floor needs to be it's been retested. But intraday, nice breakout, nice rounding bottom. Can you see that? Whoop, rounding bottom. Rounding bottom is don't forget that is a bearish signal. And because we had some data this morning, okay, from Germany, and it wasn't only that, but I will come to that in a second. We had German IFO lower than expected, and we had the European Central Bank non-monetary policy meeting as well. We had German inflation high again. So it was at 1% in a monthly basis, and it's still holding at 8.7%. The headlines is still high, 8.7%, so higher than what it used to. So we still that inflation persists. This, along with the fact that business activity in the euro area rebounds faster than expected. All these add to risk of economic growth, of further economic slowdown if rates are actually basically there's a debate on whether they are doing too much. So ECB is expected to increase interest rates further, but also it's a risk if they do it, if they put it too high, okay? But German inflation today, as I said, the business activity, the Eurozone business activity are rebounded. They have just shown that inflation persists. So ECB need to raise more the interest rates to all-time highs, and that's why we have seen euro lower. And you can say, but Andrea, that should help euro. No, because this is euro dollar. So this is euro and against the US. So even though both central banks are expected to increase rates, the ECB is expected to jump to 3.75% interest rate, 3.75, but Fed is expected to reach 5.35. So they have 2% gap. So obviously the Fed is the most aggressive central bank of all, and that's why we have seen dollar dominating. Okay, so technical rounding bottom, bearish signal, breaking this temporary low at 106.36, extending lower, over sold as well. It's outside Bollinger's, but fast moving average. I keep pointing lower, as you can see. Can you see that? This is my fast intraday 1 hour Bollinger's moving average. Sorry, bearish close. Keep pointing lower. MACD also increase lower. RSI at 30. Stochastic lower. So this indicates further sell-off for euro dollar. If I zoom into the 30 minutes chart, this is still the case. Even though it has settled a bit, moving average, I keep pointing lower. RSI also points lower. Can you see that? MACD also is negative. Can you see that? Suggesting further pressure on euro dollar. So we need to find the next support area. So the next support area, my dear friends, is coming to last week's bottom. So 106.12, 106.12, 106.12. Okay, a break of that level could turn the attention to January's bottom. Here we are, 105 and 105.55. So I have put over here the 3 support levels that you need to keep an eye on in the intraday basis. So currently, right now, is the 106.12 and the let me just be precise, 106.12. Okay, 106.12. If that breaks, the attention could turn to 105 territory. Okay, 105 round number and down to January's bottom. Okay, because also the overall outlook remains negative. Can you see the daily chart? It turned, the market turned negative. RSI at 39, and it's been below 50 since the beginning of the year. Since the beginning of the month. Stochastic is posting lower peaks. Can you see that, guys? Are you with me? So negative outlook in the medium term, negative outlook in intraday for euro dollar. Now, more questions. Hello, I spoke about gold. I don't understand what you're talking, dear. Salam. Gold, do Bitcoin. Yes. Let's do Bitcoin. Let's do cryptos. Very interesting. Coinbase announced yesterday's earnings, and I should. In this PC, I don't have MT5 because if I had MT5, I would be able to show you Coinbase as well. Nonetheless, I could show you Bitcoin, which interestingly, and I will start with the weekly chart. Okay, weekly. Okay, not daily. Let's zoom in and see what happened yesterday night. So yesterday night, it slipped a bit lower, okay? But the key over here in Bitcoin and in general in cryptos is that it's holding at the gains that have been seen for the whole year, for the whole 2023. So this rally that we have seen since December is still on. It's still recovering, or is still holding gains. Okay, from a technical perspective, there is no indication yet that all this decline that we have seen in 2021 and 2022 has changed, that this downtrend has changed. No, but the attention now is in this territory over here. It's not because it's a 23.6 Fibonacci level, but it is because we have the gap that never closed. So an uptrend higher could close this gap, okay? That we have seen this gap. We have seen this gap back in June, and that if they breach this level and break it, that could be a sign that the crypto market could eventually enter a bull market. But okay, look, this is just hypothetical things. So for the time being, we have seen a nice boost last week, but this week is hovering sideways, struggling to break the 25 to 40 territory. So, but momentum is positive. So this, even though it's struggling, there is more bullish bias than bearish. Okay, so as long as we don't see the asset moving and closing below, okay, here to be precise, 23,280. So it's the low that we have seen last week. Is this latest low, also coinciding with 20-day moving average. So as long as we don't see it breaking that level, this consolidation looks more like a sideways movement before another attempt to the upside. So to the upside, the next resistance area, the next level to be seen is, zoom out so you can see it as well, is the gap that we have just discussed, is the 23.6 Fibonacci level. So this gap starts from 27,400 up to 29. If we see a breakout of 25,240, then the asset could bridge and close this gap finally. Okay, momentum is quite good, it's bullish. So that's it. On the flip side, though, if we've seen the market breaking what I said earlier, this immediate support at 23,280, then the attention could turn back to February's bottom and 22,000 or even 21,000. Okay, 21,400. Okay, so I don't understand what you are saying, dear. I mean, I guess you are in Malaysia. Please guide me how I can deposit through HBL. You need to contact our support team, dear. Enter our website hfm.com, and we have a support chat, a live chat, support chat. Okay, and they can help you. Oh, Philippines, welcome. Cable. Okay, cable. Let's move on to cable. Even though it's something similar with, oops. Okay. Okay. Like I said last week, let's firstly check what's going on in the daily chart, and which, as I said, for many weeks now, the cable since December is in a ranging market, overall ranging market. So guys, this is good because it's good. Okay, it's not good, but it depends what kind of trader you are. But even if you are, if an asset is in a ranging market, that means that you can trade the swings. So every time that is retesting or you see a pullback from the top, you can enter short. Every time there's a bounce from the bottom, you can enter long, and vice versa. When there is a ranging market, you can still participate if you spot a trigger point. So it's in a ranging market. Key support is the 118, 1900, or to be more precise, the bottom of the range is the 118.40 territory. Let me be precise. Perfect. And the top of the range is the 124.45. Okay, these are your key support and resistance area in the medium term, in the overall picture for cable. In general, the outlook for cable is not the overall outlook, not for the whole 2023, but for the first quarter and second quarter, let's say, is neutral to negative. Remember, there's a big gap between Bank of England and Fed, but it's not only that. Okay, just very briefly, very briefly, to remind you about the current situation in England and in the economy, the UK economy. So, okay, we have seen, thank God, if I can say that, we have seen the inflation, at least in UK to slow down a bit. Okay, but and that actually helped pound to boost higher, as you have seen. Let me just zoom out a bit so you can see it. In general, we had a nice strong rally since September up to December from the pound, a strong rally against dollar. And other than the dollar weakness back then, it's also the fact that we have seen the inflation in UK slow down a bit. And that means that Bank of England could be the next bank that could stop increasing rates, that could pause rates. And that's why we have seen cable holding these gains for 1, 2, 3 months now, holding gains. But it's in a sideways movement because even though inflation has slowed down a bit, the Bank of England is expected to be close to stop increasing rates. However, the last statements from the Bank of England's official have hinted a possible they have hinted a possible pause. This is something that we are pretty much expecting, but there are 2 voters that they are against, and they are insisting 50 points hike. So there is uncertainty in regards to whether they will pause in the next meeting, so now in the next meeting in March, or whether they will increase for a last time. Inflation has slowed down but remains high, so we need to see more. And the other debate and the other uncertainty is in regards to the wage growth, to the salary growth. Okay, so these are the 3 main things that they holding cable sideways. So as long as we see something out of those 3 cleared, okay, we might see the cable taking direction, if I can say that. But overall, the wages, inflation, and the Bank of England deviation, because we have seen 2 members to insist to pay 50 points, this deviation keeps a cable sideways. So we need more evidence, especially in the labor market report or the inflation number. So risk remains, and that's why we've seen the cable sideways. Now, hello, everyone. Okay, sounds is good. Cool, thank God. So, okay, analyzing cable. I lost my, where am I? Okay, so this 124.45, 118.40 are your support and resistance levels overall. So if I zoom in, we have seen that it retested on Monday, was it? No, Friday, the bottom of the range, and it slowly recover a bit, but it remains below the 20-day moving average. So there's a lot of uncertainty, but a move above 20-day moving average, or what you can do is to find the mid of this range. So the mid of this range, my dear friends, is at 121.40, which is actually today's highs and the 20-day moving average. So yeah, a break of, you see that, guys, a move above, a closure above 121, 121.40 today, a nice closure could retest the top of the range, but we need to see it happening. So we cannot, there's no indication yet. So we need to wait for tonight's closure. So let's focus for that exact reason. Let's focus on the going to delete the rectangle. Okay, cool, perfect. So let's focus then into the intraday basis. So here we are, 1 hour chart. Actually, I'm going to start with 4 hour chart just to check whether there is a pattern that I might have missed and etc. Nothing really. Let me check. Up. Yes. Sorry. So up. Like an expanding triangle. No, there's nothing. But it's moving up. A bit of it rebounded last week, sideways, rebounded again, sideways, in a bit of a pullback. So it would be important to see whether it will rebound again away from this one, from this trend line that I have just put. MACD improved a bit, but it's close to zero, so it cannot indicate that it will indeed continue higher. RSI is at 53, so still not a strong sign. It's actually neutral, so we don't have nothing in the 4 hour chart. Let's zoom into the 1 hour chart. Nothing really, my friends. Nothing really in the 1 hour chart either. So 3 doji candles so far. So sideways movement, a lot of uncertainty, flat RSIs, flat stochastic, very, very neutral. There is no indication intraday. There's no trend intraday, nothing. Moving up, my moving average have flattened as well. So what can I say? Pound, nothing really. Just keep monitoring it, but for the time being, it's just flat, 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 flat. We need either to see turning back higher again, so that means at least a move back above 2120, so to put this, to regain these losses over here, to regain them back, or a dip lower to retest, or whether it will retest or break the trend line that I have put. Okay, so not excitement, not an excitement for cable right now. Yen, of course. Yen, where's my yen? Here it is. Steady higher for February. Broke last week the 133 handle, extending higher slowly. You see, small body candles, but higher. So 134.70. Okay, let me zoom out a bit to see. Oops. Sorry, yeah, here we are. So let me see a bit what's going on. Here, MACD turned positive, RSI is flat, but is having this upwards movement. So positive outlook for dollar yen for the time being. So the next resistance area, because it has already retested the 135 level, so a break of 135, it could retest the 3660, 136.60. So let's see what's going on intraday. 1 hour chart, okay? 1 hour chart, completely swipe out the losses that we have seen last week and turn back higher. So the ET surrounding is, guys, this reminds me like a cup handle. Very interesting, but not a confirmed cup and handle over here. Let's see. I want my arch as well. And no, that's it. Let's see something. Okay. Can you see that? Can you see what I'm saying? Like it looks like a cap. I don't know how to draw it on MT4, but oh, that's a huge failure of drawing. Let me try again. Okay, a cap. Oh God. And handle. Can you see? Okay, it looks like a cap and handle. Obviously, it's not finished yet. So what I'm gonna do right now is clear this mess that I have just done. Okay. No, I want the arch because it gives us some immediate support and resistance level. Come on. Okay, I will keep this just to give you some immediate support levels for today's trading, for intraday trading. Okay, but I'm gonna connect the highs and the lows over here, maybe with a different color, maybe green for these two, just to keep an eye on, just to monitor it, guys. Because if it's a cap and handle, okay, and we see a breakdown, if we see a breakdown of this handle to the upside, because a cap and handle usually is a bullish, if confirmed, is a bullish pattern. So, but in order for this to happen, we need to see the asset breaking this handle, or otherwise called descending triangle. Nice. This descending triangle or handle of a cap, breaking it, and not only breaking it, also breaking the top of the cap. So that means 135.22. So we need firstly a move above, outside the handle, and more precisely the to breach and break the 135 level. So that would be the very, very first sign that we could see the asset extending higher, resuming its bullish bias, and the confirmation could come as soon as it breaks decisively the top of the cap, so 135.22, because this will mean, could mean that, come on, sorry, that could bring into our attention the next resistance area, with the next resistance area, guys, back in the beginning of December. So that brings into attention 136, 137, 80 territory, so more than 200 pips away. Okay, so there are a lot of ifs and ifs and ifs in this sentence. Okay, but it's for you to add in your monitor list. Okay, is that clear? Let me see further questions. So done gold, done yen, done cable, done. We have discussed this, Mohammed. Thank you. Um, that's tricky. um, Oh. Cannot really tell. I like the popular ones, Bollinger's moving averages, um, RSI, pivots, fractals, but that's because I also analyze intraday time frames, dear Renante. So it depends from what kind of trader you are and which time frame you're trading. Okay, so it depends. The most of them are not lagging. I mean, the ones that I just mentioned. Um, Euro yen, pound yen. Okay, let's do this quickly. Euro yen and pound yen intraday. I'll use the 30 minutes chart. Oh, that's why you ask. A big sell off in euro yen and pound yen. Nice. So breaking this floor, this immediate floor, extending lower, full bearish candles, a lot of sell off. MACD turn negative. RSI keep slowing down, and there is further steam. There is further area to be covered from RSI. My moving average, I keep pointing sharply lower. So that is a very negative bias for euro yen intraday. So the next floor is pretty much on Monday's bottom and the 143 level. TR, ask for it. And I'm really sorry that I'm late. TR Junior Linand. So a lot of sell off apparently in euro yen. Next support 143. If that breaks, then attention could turn to 142.80. Okay. Now let's do quickly the pound yen, which should have something a similar picture. No, it doesn't. Okay, so I guess it was the euro data. So what we have over here? Still, but it's still in line with it. Okay, it's still in a channel. Okay, for the pound yen, my dear friend, I'm gonna start with the daily chart because I have just spotted that it's moving in a channel in February. I have seen that it broke in this significant resistance that it was holding for nearly 2 months. The 162 area, basically, I will make it a round number. Holding above 162, it is in a up channel. Okay, momentum is slowly turning positive. Okay, delete that, I don't need it. Is there anything that I should be aware? Let me, out of curiosity, I want to see where it's standing. Oh my god, oh, that's important. Okay, because now it's retesting the 61 it has. No, yesterday and today is in between 61 and 50% Fibonacci level, which very interestingly, it used to be a very strong support between from October until December, so for 2 months. So you can understand, guys, that the breakdown of 61 could imply to a potential return of November highs, November and December highs. So that means if the asset this week breaks the 61 level, so 164 territory, it could breach 169 or even 170 territory. So keep an eye at the end of the week or today and tomorrow on the pound yen. Let me now zoom in to the intraday setup. Let me get rid of this rectangle. Perfect. So we are in an up channel right now. It has a nice smooth rounding top, and return to the mid of the channel, but that doesn't necessarily mean that it will start
that they will continue the sell-off because my RSI already flattened for 4-5 consecutive sessions. It didn't manage to break the it's moving sideways for 5 hours in a row and unable so far to break the middle line of the channel. So as long as it's held above the middle line of the channel, that means that it will not get back down to 161, 162, or even 160 territory. So what we are waiting so far right now, we are waiting to see either a breakdown of the middle line of the channel. So put the channel on, it will help you. Okay, either a breakdown, and that could mean a retest of initially 162 territory, or we are waiting to see a rebound. Okay, so that will mean, and how we can spot this middle line, we need to see the asset turning back above 163 let me just confirm that I have put, no, actually, let me, not so much. So to recover at least half of the losses that we have seen today. So that means it needs to return back to 163.12. So if that happens, then it means that it will resume its uptrend. Okay, so keep an eye on 162.70 and 163.12. A break of 162.70 could open the doors further to the downside, and that could mean that it could break the middle line of the channel and retest 62, 162, or even 161.70 territory, while a failure to break that level and a rebound away from that level could suggest that the upward trend is resumed. So that means eyes will turn back to 163.70 or even higher to 164 and etc. Very interesting process. Thank you for bringing them up, my dear friend Junior Lincoln. Regenta, I don't really know. You need to contact in regards to the copy trade. Please contact our support team or your account manager, and will help you to understand the difference between floating profit and loss and the lender's balance. Okay. How to buy stop and sell stop. Okay, you mean how to set it in your MT4. Right click, trading, either buy limit or sell stop over here, or click new order, and on the order execution over here, you can find buy limit, sell limit, buy stop, and sell stop. Okay. Okay. I think that was clear. You managed to see it. Yes, you did. Okay. Let's move on. Date of birth. Again, please contact support. Please, guys, please. I cannot help you live right now. If you go to www.hfm.com, there is a live support chat on top, and they will help you. Dollar CAD. Very nice call. A mega call for dollar CAD. So, okay. have you seen? Okay, we dollar CAD overall is in a descending triangle, and basically the data that we have seen yesterday, they just help. They give a relief, let's say, for the central bankers. Okay, by relief I mean that yesterday's data supported the decision from the Bank of Canada to stop increasing rates. Okay, that's why. Okay, let me zoom out. So that's why we have seen dollar CAD but higher, because Bank of England has announced that the Bank of Canada, could once again confirm their decision to pause their tightening policy, and this is bad for the currency. Or if you prefer, it's not bad. It's just adding pressure to the currency of that country, because the higher the interest rate, the more expensive the country's currency gets. The lower the interest rates, the cheaper the currency gets. So this anticipation that they will confirm once again that they will stop increasing rates is what it drove a weakened Canadian dollar against US dollar. Now, but dollar CAD is not so, it's not an asset that is so well correlated with the inflation, like the other currencies. It's more correlated with geopolitics, with oil, with OPEC, and etc. So these are still on the way, and they are still some of the key drivers. Okay, and having in mind that there's a lot of fear that the oil demand will slow down further due to the slowdown of the global economy, that could add further pressure on the Canadian dollar. But nevertheless, okay, for the time being, let's see the technicals. We have seen the dollar CAD in a descending triangle since October. Okay, retesting the top, retesting the bottom, and right now, yesterday and so far today, is retesting once again the top of this descending triangle. This implies to a potential pullback intraday. So let's zoom in to see what's going on. Indeed, up, 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 but a small body candles, and now a pullback. So let me zoom in further into the 1 hour chart. What we have? It was consolidating on my trend line on the top of this channel, so struggling to break it. It broke it in the European Open, but quickly turned back down. So like every other pattern, we see at the bottom or the top a retracement. How we can confirm this retracement? What you can do is either use your Fibonacci or wait for a breakdown of the support, of the immediate support. So the immediate support in this case, now I'm in the 1 hour chart, the immediate support in this case is this double fractal that I have at 135.20. So a move back. So now it went back to my into my descending triangle. But I need more. I need more in order to identify whether we're gonna see a pullback and we could potentially see it turning back to 134, 133 territory. So we need to see a breakdown of this immediate support at 135.20. Okay, let me zoom out. Let me also so a breakdown of 135.20 could push the asset to retest 135.90 or even 134.50, which are very important support levels. Why? Because they used to be support resistance areas. Can you see? Can you see this? Double fractal coinciding with 61.8 Fibonacci level, and also just a breath below the round 135. If that breaks, the next support is down to 134.53, which is our 100% Fibonacci level on this swing that we have seen in February, and actually since last week. Now, yes, so yes, that's it for the time being. Okay. Let's move on. Yes, but that will mean to grow by some dollars. I mean, $1, $2, $3, $5 growth. So very, very slow, very, very slow cents. We have done euro dollar, we have done gold. Dear, I cannot tell you, I cannot help you via a live stream. You need to go through our website. You need to read as much as you can from our website. You need to get familiar with Forex industry if you are not familiar with it, how the financial markets work, how the platform works. I mean, you need to do some homework, okay? We have a lot of educational material online. We have a lot of videos. We provide for free webinars, so join us. And we have also in our YouTube channel and on our website past webinars. So if you're gonna have time, you have time to study, please start with the webinars called Understanding the Market Basics. Okay. Thank you, Marilyn, for your good words, for your words. Indicators, Bollinger's standard deviation is 1.5, sometimes 2, depends on from my channel. I use 5 and 9 exponential moving average only for 1 hour or 30 minutes chart. I have my MACD, my RSI by default, stochastic 533 settings only for 1 hour and 30 minutes chart, and my fractals. We've seen pound yen. What do you mean? Where are the volatility in HFM up? Volatility indicators, maybe. Can you again contact a support team? They will give you a screenshot where to find it. Okay. Let me scan your comments to see whether we have anything else. We did dollar CAD. Oh my God, you need to find somewhere those 100 packs. I fixed the voice, thank God. This is massive. I don't know to what you're referring to, but from this expression, I understand that is good. Thank you, Marilyn. Thank you very much for your kind words. Very good, guys. So you spotted dollar cat. Yes, it's very interesting. Intraday and in the daily chart. So, it's already in a sell-off. Look at that. So keep an eye on the support areas that we have just mentioned. And one more thing, just okay, that's nice. It's already below the 23%. Okay, excellent. So keep an eye on the support levels that we have just set, guys, because it's nearly ready to break it already. 20-day period moving average in the 1 hour chart broken. The my fast moving average have already started to are ready to bearishly cross. Very nice. Thank you for bring dollar cut up. We see dollar yen. We did gold, guys. Anyway, as soon as I pause the session, I stop the session, you can drag and drop and go to the gold analysis and you can watch it again because we spend a lot of time for gold. Okay, I don't have a personal page to share, but everything, our thoughts and etc., is in our articles. It's in our live streamings, and also it's on our Twitter, and also on Stuart's Facebook, Stuart Cowell. So he's posting for both of us all the thoughts that he has, news, and things that you might need to consider. Again, you should start, Chandron, you should start from the basic. You should do some homework, understand what is the financial markets, how they work, from what they are affected, what CFDs are, everything, leverage, margin, spread, etc. Okay, everything is in our website. If not, please. Also, Investopedia is great for beginners as well, but we have some webinars for free recorded already in the YouTube channel and in our website for you to start with. Another newbie over here. Voice not clear. Pound cut. Let's see, pound cut. Someone asked about pound cut. A big sell-off. That's okay. Not sell-off, actually. It's hovering, it's sideways. So dear, I'm not just be quick on that. Support is at 163.50. Resistance remains at the high of the day at 164.17. So as long as we don't have an indication, a breakout below 163.50 or a breakout of the recent high, that we cannot tell which direction this asset is going because it's moving sideways for many hours now. Okay, so overall, however, the outlook is positive because we had a nice, strong, bullish candle yesterday, nearly full body one, crossing below the 20-day moving average. Very decisive candle, and that is turning the attention higher. Okay, it's turning the attention into a potential retest of 164.50 level. Okay. Scalping. I feel good about scalping. I mean, it's up to you. If you like scalping, if you are scalpers, go for it, but do it wisely. Follow your a system, a scalping strategy. Write down anything that you spot. Use the most appropriate indicators for scalping. Nothing wrong about scalping as long as you do it. You have a plan, you have a system, you write down everything, you use risk management, stop loss targets, risk and reward ratio. Nothing bad about scalping at all. Tragedy. Do you practice that tragedy? Oh my god, this hack. So it's a tragedy for you. So you might not be a scalper. This might not be your thing. So you should try something else, a different system, swing trading, breakout trading, uh, medium term trading, day trading. Maybe scalping is not for you, but there's nothing wrong with it. So, what Agnidi, please, have I missed your comments, Agnidi? Why you're saying please? Mm, I cannot spot any other comment for you from you, dear Victor. Did I missed it? If I missed it, I'm really, really sorry. Guys, I'm gonna call it a date. If we are done, I cannot see further questions. So I guess we are good. Anyway, this is recorded. This will stay in the Facebook page. This will stay in the YouTube page. So you can drag and drop and see the analysis that we have done for any asset that we have covered today. Very, very important and interesting assets. Pound yen, euro yen, dollar CAD, cable, euro dollar, gold. Oil was in a sell off as well earlier. We haven't seen oil for sure. Stocks are in a bearish mode. So this might continue the European Open because FOMC is tonight. So this is Nasdaq, by the way. Okay, so you see very, very pressure on stocks. Where is my oil? I used to have oil. Cryptos also. Cryptos are the only ones that they hold gains. But as we said, a key resistance at 25,200. Oil had a sell-off yesterday and in the European Open tonight, but it stopped and it hold a ground at 74.87 level, but remains under pressure. So we have, I think it's a descending triangle, isn't it? Not precise. No, it's not a channel, but it looks like a triangle to me. Let me double check. So oil under pressure. Yes, descending triangle. It looks like a descending triangle. So keep an eye on oil as well. Floor at 84.80. A break of that could open the doors to February's bottom and 72.50 territory. What else? I think that's pretty much it. A lot of volatility. The VIX cross above 23. Next top at 24.10 and 24.50. And that's pretty much from me, guys. I'm gonna call it a date. Okay. So thank you very much for being here. Oh, sorry. Hi. How do you feel about scalping? Do you practice that strategy? Yeah. Yes, I occasionally present scalping strategies, both of us, both me and Stuart. And actually, the 5 and 9 exponential moving average that we do, that we use, they are good for scalping strategy. That yeah. So yes, some, but again, depends from the personality. So it depends on the personality. Sometimes for me, it gets a bit anxious. I get a bit anxious, but it's so it depends on the strategy, on the personality. Nothing wrong about scalping. There are a lot of good scalping strategies out there. So if you want to try it, yes, do it, but in a demo account first, just to see how you feel about it, whether you understand it, whether you can follow it, whether it gives you good results as well. Demo and try it. Nothing wrong about scalping. It's another good strategy. It solely depends from your personality and your ambitions as well. Okay. Thank you very much, guys. Have a great day ahead. Take care, FMC tonight. Take care on the US Open because we could see a bit of further pricing in on the US Open tonight. Actually, in 2 hours from now, less than 2 hours from now. Um, yeah, that's it. Thank you very much. Have a great day ahead. Take care. Always remember risk management, stop loss, target. Okay, money management. Thank you very much. Have a great day ahead. Bye bye.